Today I want to talk to you guys about one of the most misunderstood but also one of the greatest tools available to Canadians as far as financial planning is concerned, the tax-free savings account, otherwise known as the TFSA. Now I feel that this is basically mostly misused because it was so improperly named. In my opinion, the TFSA was the fourth worst named product or thing in the history of the world behind these three things. First of all is tastes like grandma raspberry jam. Second is whatever the hell this kind of dip is. And last but not least is this poor guy. I mean, what kind of parent with the last name Pusey would name their kid Lucius? It's just ridiculous. Now, why do I think the TFSA is improperly named? I remember in 2009 when I first heard about the tax-free savings account, somebody's like, look, you don't have to pay taxes on the money in your savings account. And I was like, big deal, man. I'm like, I've got like $100 in there and I'm pretty sure that I owed like 10 cents in tax last year on that. I think I'll survive if I don't have to pay that. Like, whoop-de-doo. And that was until I actually understood what it was for and what it should have been called. It should have been called the tax-free investment account. TFSAs are meant for investing, in my opinion, and they're absolutely incredible. Now that's sort of where banks tend to trick customers into doing the wrong thing with their TFSAs. And so here I'm just going to give you an example of sort of what happens. I know that they entice people to come in because they say they get a good introductory interest rate if they open a TFSA. So I'm going to use an example of a 40-year-old man or woman, makes a good income, has quite a bit of savings, but has never opened up a tax-free savings account. Currently they have $46,500 worth of room in their TFSA, and every January 1st that amount is going to go up by $5,500. So if this 40-year-old man or woman goes into a bank and they tell them to open one of these accounts, and then they say, look, we're going to give you this great interest rate of 1% if you're lucky on your money, and now just keep adding to that and see what happens. Let's just keep doing that every year until you retire. So you do that for 25 years, and look at how amazing that was at the end of the day. You just turned your $184,000 investment into $216,000. Like, congratulations, you just made $32,000 tax-free in 25 years. I mean, that's brutal. That is not what it's for whatsoever, in my opinion. So now I'm going to do another example where instead of investing in cash that's generating a low interest rate, we're going to invest inside your tax-free savings account and see what happens. Now I'm going to use a projection of 5.5% for pretty much every time that I give you an equity-based number. I feel that that's a conservative estimate for what you should get if you have a proper portfolio, but I also feel that financial planners should err on the side of caution, not to get their clients excited or to promise you something that you might not get. So I'm going to use 5.5%, and we're going to look at this exact same person and see what happens. Over the course of 25 years, they turned that $184,000 investment into $474,000. Now they just made $290-ish thousand absolutely tax-free that they can now take out every year as part of their retirement income tax-free. So that turns into about $37,000 tax-free a year from 65 to 85, in comparison to the last example where you weren't even being able to pull out $12,000 a year. So I mean, That's a huge difference. It's great tax-free money that you can make and use in your retirement plan. I know a lot of you are saying, well, whatever, Kent, that doesn't really matter. I mean, I don't have that kind of money. I can't put that kind of money away, and that's fine. I get that. That is a lot of money for the average person to save, and most people can't do that. So now let's just pretend that you're a 25-year-old man and you can find a way to put away $2,000 a year for 40 years until you turn 65 and just see what happens. Doesn't seem like that much, but you just turn that $80,000 investment into more than $300,000. So that $2,000 you invested a year turns into about $22,000 tax-free in retirement income for 20 years coming out. Now look how good that is for a little bit of an investment. Please stop using your tax-free savings account like a typical savings account. That's not what it's meant for. And keep watching. Thanks.